The key thing here is that anybody who is in either gold, silver, or Bitcoin, we're basically rebels. We refuse to have a muzzle put on us and let it on like a dog on the street with social distancing.
The basic story of the 2008 financial crisis is familiar enough.
It is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, the artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time.
When iconic US investment bank Lehman Brothers Holdings filed for bankruptcy, it shook people's faith in banks so much that a new class of asset, which did not have the backing of any formal bank, came into existence.
This is our simple intro to how Bitcoin was created. The 2008 recession created so much chaos that it made people lose trust in the money system and how it was managed. In 2009, Bitcoin was born, and with a max supply of 21 million. Yep, that's really all there ever will be. That makes Bitcoin a rare commodity in the future, just like gold or any other physical resource. So we're gonna go over the basics to understand cryptocurrency. And before we get started, subscribe to the channel and see more content about new crypto ideas and how to improve your cash flow. First part of understanding any cryptocurrency is to know that it exists only on computers and is digital money. In the 90s, some tried to make a form of digital money like DigiCash, Hashcash, and B-Money, but none of them had the tech and structure correct, just like Bitcoin. Satoshi Nakamoto was the known creator of Bitcoin, but no one knows if it's a man, woman, or a group. I'm going to go over some basic terminologies, and this will help understand the basics of any crypto coin. First, we have decentralization. All cryptocurrencies are decentralized. This means that it's trustless. You don't need to trust or have servers to control the system. I know this might be hard to understand for some people, but today our trust in normal money and money is basically just bits of metal. They're controlled by the government. And this money is called fiat money. This is the money we use to go buy groceries at the supermarket, we get paid our salaries, and we deposit that money in a normal bank account. Then those same bank accounts use their own centralized ledger and our personal information. Cryptocurrencies don't need bank accounts or governments. All the data is stored into the blockchain. Then the blockchain is made up of public nodes, and those nodes are set up for mining, and they verify all the transactions on the blockchain. Crypto doesn't use your name, address, or your date of birth. They use two main data points, a public key and a private key. So think of the public key like your username, and the private key is your password. So this makes it open for everyone to see. It also makes it so no one can see your name also. Bitcoin is the main cryptocurrency, and based on some historical data from other companies like Apple and Microsoft, Bitcoin has hit a $1 trillion market cap in just 12 years. And even in the past 4 years, they were able to do that very fast. So I know a lot of this is new for a lot of people, and this is not financial advice, and I'm not a financial advisor, and I'm going to tell you exactly to buy Bitcoin, but it's definitely something to look at for your portfolio. It's always safe to at least put a good percentage of what you're okay to lose or what you're okay to invest in. And this is definitely something to start your new journey into cash flow. I plan on making other videos about cryptocurrencies, and so just drop me a comment and let me know what you guys want me to talk about. So thank you for watching.